Meanwhile, PepsiCo, one of the worst hit packaged food companies, saw its stock fly up after the company reported a good quarter that threw water on the weight loss drug thesis. There hasn't been any downtick in demand for soda or for Frito-Lay chips. If anything, there's been an acceleration in purchasing to the point where PepsiCo felt comfortable to raise its forecast for next year, something this company almost never does. They don't forecast for next year out. You know what? I think that was a sign, a palpable sign, that Pepsi had had enough of the bogus, bearish narrative and wanted to take control of its own destiny. So you had rates go down. You had some concrete evidence that PepsiCo has little reason to fear the weight loss drugs. CFO Hugh Johnson made it clear that he's been Pepsi through 55 quarters of forecasting and has never missed. That's the kind of track record that makes the short sellers think twice before pressing the bets on Wegovy. Now, what's the truth? Frankly, I think it's just way too early to assess the impact of Wegovy or Mounjaro on pretty much anything. Mounjaro hasn't even been approved for weight loss yet. And that includes whether it's really going to hurt Dexcom for glucose monitoring systems, down 25%, or Conagra down almost 29%, Coca-Cola down 15%. That said, I don't really care for those stocks because, with the exception of Conagra, they're too expensive. And I see a lot of tech stocks that I really like more. Jeff Marks and I, in preparation for our monthly investing club call at noon tomorrow, will you please join the club? It's going to be great. Kicked around the idea of buying back some of the Procter & Gamble stock we sold much higher for the Travel Trust. That stock's not down as much as the food and beverage plays, but it's still off more than 4% for the year with a 2.6% yield. And they raise the dividend every year, or they try to. They have. But what we think it's been tarred by the same broad brush as the food and drug business, even though, well, I like the taste of toothpaste, but I'm not eating it. This is a rich stock, too, but I think it's the right thing to buy. Now, I saw a survey today which showed that many companies might offer health insurance that covers these $1,000 a week weight loss diabetes drugs because they lower the number of people at risk of heart attacks and a host of other diseases. If it turns out that there's broad acceptance of these drugs in a short period of time that no one's expecting, I do think the earnings estimates have to come down for the food and beverage stocks because people will eat and drink less. It's a volume issue, okay, because they won't crave and they're a lot less hungry. Always say volumes go down. Remember, it's one thing for interest rates to go higher and quash these stocks along with so many others. It's another thing to put your stock portfolio at risk of an earnings miss, especially when the stock's more expensive than the rest of the market.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.